What is up? Finally getting around to this video. I know it's been some time here, and I've been promising it, but I've also been extremely busy, so just trying to get to it. This is Nick. Just want to hop in, kind of give you some more market dynamics, just overall rundown of AMC, macro trends, and just a little bit more about myself, because it's hard to explain all this stuff in some character limits on Twitter. So I did bring Darren Lewis on tonight. He's just kind of been someone I found on Twitter through the Legion account, and we just have a lot of similar viewpoints in regards to dynamics or just kind of technical analysis in itself. So just going to kind of dive into it, give a quick background, and we'll get things rolling. So like I mentioned before, not a financial advisor, so obviously this is all opinionated stuff. I do hold a Series 763 and SIE, not sponsored by a firm, so it's completely legal to say any of this and just kind of give my own educated opinion on what I view with what's going on right now. So I'll let Darren kind of introduce himself and we'll just hop right into it.
Yeah, what's going on? This is obviously Darren. Met Nick through Twitter here. He was saying, we have a lot of similar viewpoints when it comes to technical analysis and kind of where we are at in the current market dynamics and AMC stock. So I kind of just wanted to hop in with him and go over some stuff with you guys because I know it's easy to get frustrated, easy to get freaked out, but when you look at things in a more macro perspective, we're not doing too bad. So
yeah, man, and that's just like kind of it. Just getting started is like the biggest thing since I kind of made the account on Twitter, like early February. There's obviously certain reasons for that. Most of you understand why. It's just kind of one thing I've noticed. It's like obviously our weak point within is just trading with emotions. So like I'm pretty sure he made his account name based on kind of a play on words. Like obviously you don't want to trade with emotions. Like that's what quant algos do. That's how they operate, and it's been proven. So like one thing I've just been trying to get everyone to understand is perception isn't always reality, and causation isn't always correlation. So like I'm never quick to assume, Darren's never quick to assume, so we just wanted to kind of clear up some misinformation, give you facts, factual optimism, not hopium. So I just kind of have like my macro chart set up, and Darren, if you can see it on your screen too, you've seen it before. This is just like what are we on here, 10-year 1 week. So each candle represents a week long of trading. So it just kind of gives you a more macro trend, where some key resistance and support has been, and the volume profile. So obviously AMC's been shorted since arguably I think their big fulcrum to where they just kind of wanted it down the toilet was since 2016. You can make the argument like early 2014 as well. But these lines here are all like self-drawn. They're not really Fibonacci's. I do play Fibonacci's, but this is just like I was taught by a seasoned futures trader on the trade desk at TD Ameritrade. So I know Fibonacci's are true and they play to an extent, and I like standard deviations and all that jazz, but these are just kind of visual supports and resistance that I've found. So you got like your first one, big one, 1776. Adam Aaron's referenced that a couple of times. Like a lot of these, he's kind of subliminally mentioned this. So like this 1776 that I references goes all the way back to February of 16. Which is just crazy to think about. But these macro resistance and support have been huge for us. So you can kind of see the chart here from a macro standpoint, where these key figures are coming off of. They're not just random lines that don't mean anything. A lot of them play into the micro a lot more than people understand. And there's a reason why like we fell off the cliff once they got us under 1315, which I didn't expect them to do. So just because that happens, again, data changes. So like if a prediction is off, people just have to understand that nothing that I draw here is going to dictate where the stock goes. And I'm sure Darren can attest to that for sure.
Yep. Yes, sir.
So yeah, just my micro analysis. This is a wedge that we'll get into later. And this is OBV coming over the top. So OBV, on balance volume, just basically shows you the current on balance volume, the amount of selling going on, and anything to that regard. So like I saw this earlier, but Netflix was on here. And I thought this was really funny because if you notice, like OBV doesn't even move hardly on AMC. Well, if you throw on balance volume onto something like Netflix, it drops like a knife, like when the stock drops, because people are actually selling and offloading it. So then like if you flip over to AMC, dude, OBV like has not like significantly dropped. I mean, honestly, since the beginning of last June. You can argue obviously the downtrends, but like from a support level on OBV, that's kind of the core of what we're going to talk about. But just kind of wanted to give you a quick overview before we kind of get into SPY and how market conditions correlate. But yeah, like with you, Darren, like I know it's hard to have conviction against the grain, especially like when emotions are involved and people would just think, oh, we're going to 8 or we're going to 10 or whatever. So like kind of give your viewpoint on like the head fakes from social media, mainstream media, and kind of what like these guys do are kind of tying along with what I just mentioned.
Right. Yeah. So, in regards to just where we're at currently,
I'll get you a screen there for 1 second.
so before we even get to the correlation with SPY, I know you're at the fixed volume range.
Yeah,
chart.
it's nice
But,
to have for sure. And just give them a quick rundown. Like most people know VPR, but like
right here.
what would you say VPR represents? Quick, like obviously just layman term of VPR. Just a volume profile, so just kind of like the allocation of buying and selling in certain regions is how I understand it. So like low VPR means it was either knife down or some sort of negative catalyst, but it reveals a lot. Like it's heavy supports and heavy resistances and
Right. Yeah. No, I was trying to get this profile range picked over here.
Yeah.
But yeah, no. I mean, if you look over here, you can see that the point of control. I'm going to show the comparison to last May because I think the comparison is there.
Yeah.
But you can see there's a lot of accumulation, a lot of volume coming.
Definitely.
Range. Obviously, you can see redistributed down to here. But so this shows that this doesn't mean that things are dead. A lot of people saw us go down to this range, bounce around. A lot of people just think that this kind of isn't going anywhere. It's gonna be a dead cat.
Oh yeah.
But you can clearly see there is a lot of accumulation going on at this range, and if you look at this, you can see that the overall point of control.
Okay.
It's right over here. You can see how much accumulation we did.
Yeah.
In this range, which is eerily similar to what we're currently experiencing.
Arguably, like even stronger. Like just because of like you see like the wave or kind of like it's not as spiky as the pre-June. So I think like more people understand OBD's risen, utilization has risen. Like, I don't know.
No, I mean, if you thought they were screwed last year, if you go ahead and look at that OBD that Nick just showed, this means almost absolutely nothing. This is the way that institutions and whatnot are accumulating more shares.
Yeah, it's really insane. Even if you just like back up to the chart that I'm on, like the 10-year 1 week chart, like the VPR within the 15 range down to like the $9 arguably is just like so strong that the fact that they're even able to pull this down into it is pretty impressive. But that's kind of more where like broad market dynamics come into play. And like, yeah, we have negative beta, but we can't like sit here and pretend that a drop off of what was it, like 445 or something down to 396. Like obviously anything involved within is gonna get the crossfire from that. So that's one thing like that we kind of mentioned too. So like with the macro sort of mindset on things, it's good to understand the market that you're trading in, and I try to like preface that a lot within the Discord is like just because last quarter in that earnings season, just because when they beat on earnings and they ran does not mean it's going to happen the next quarter or like the next earnings season, because that's where like that's the core of market dynamics. Like you have to understand what type of season you're in, and like I thought we were going to run, and we did off of earnings, but obviously I also mentioned with the season that we're in, it's going to take earnings about 1 to 3 sessions to like fully hit the tape. So it's just, again, that just comes with experience. I'm not saying that like it makes me feel better or I should have warned the fact that was going to happen. Like no, like I expected more of an M&A and something to come of it, but of course like that didn't happen. So we move on to the next day and like know what's controllable. But yeah, kind of hit on like the more macro side of things. Like we both saw the same thing. We both hit, oh my gosh, dude, what was that one day you hit like a 600 or 500% run?
Yes, sir.
On SPY. Yeah, and it's just like, what made you see that before I saw it, or like maybe what made you agree with kind of like what I was seeing to understand the same thing that I saw? If that makes sense.
Well, I think that was right back here.
It was last Wednesday. Should have been last Wednesday on that micro pump. Yeah.
Yeah, so essentially, I mean, just even without, almost without using any TA,
Yeah.
it's like you can just tell. So the way these guys work, the way these market dynamics work is obviously we know, you've heard the terms bear trap, bull trap, so on and so forth. Just learning market psychology.
Yes.
Is one of the biggest aspects of trading, being a successful trader, is you have to understand how it operates, how they trap people, how they collect premiums, so on and so forth. You'll see a lot of people with Amy, especially. I see this all the time. Options are bad. There's the whole hashtag no options may thing, and I think it's a bunch of rubbish.
It makes me laugh, dude. Especially like knowing the truth behind it, and like the fact that anyone can spin that narrative and run with it, maybe just because the first person on the telephone didn't understand it fully. So then that person telephoned it to the next person, and it's like, dude, that's the issue with retail right now, is that we're quick to believe negatives, but we're like naturally skeptical to like understand truth from hopium. Like, I hate this hopium run and like the option stuff. Like, obviously there's hopium or tinfoil stuff that like I even like joke about, but like I'm not gonna discredit it until it's proven wrong. But I'm also not gonna like base my TA on it. So
Right.
That's a whole conversation in itself. But like the last run that we hit was last week on Wednesday, I think it was. I'm pretty sure it was Wednesday. Yeah, right there. That massive move. Did you like start macro, or like did you already have these indicators set up, or what also like helped you?
Yeah,
I don't
so
even use all these.
Yeah, no. So I use my favorite things to use are Bollinger Bands. I'll use EMA crosses, and then obviously I try to identify patterns, candlesticks, so on and so forth, to kind of help me figure out where I think we are, what the next move will be, so on and so forth. When you've been hearing it, and if I zoom out on SPY here, I mean it's very clear that something substantial is happening.
Yeah. Changing volume.
All of retail has been, cheerleading the crash, so on and so forth. Not that any of us necessarily want it, but we just know, a lot of us have learned that it is in fact almost a necessity at this point. Again, that's a whole conversation in and of itself. Just in terms of when everything is seeming bearish, and sometimes you definitely can get burned on this.
We found that out.
Sometimes you can absolutely get burned trading this way. So make sure.
So you just kind of like took a combination of like the sentiment, what was being pushed on mainstream media, kind of just like chart dynamics, and also just like a supply pull or like some like oversold aspect of it. Like obviously you had like a little bit of influence from stuff I was sharing, which I will hear shortly, but just to like add more to it, like when you're looking at that previously.
Yep. Another huge thing I like to use.
You mentioned Swiss towers and stuff too.
Yep. Another big thing I like to use is RSI.
Nice.
So in regards to where SPY is currently at, and this is the big jumble right here, is the fact that, we have a lot of people saying that, what before I even get into that, what I noticed was weird, and this is also a fib level. I could get that pulled up, but
yeah, no, you could.
There is, let me get rid of these EMAs. We have gapped at this.
Oh, gap down, yeah.
3 times now.
425.
Yeah.
Wow.
Yep, we've gapped at this level 3 times. So something about that level is obviously significant. I'd be lying to you if I told you exactly what it was, because I do not know. I just know what I see.
Exactly.
And I trade off of what I see.
That's a good point to hit on too. Like, I think a lot of people mess up their trading or allowing like emotions to influence it because they think they know what's going to happen versus trading on what they see. And I'll get into that here shortly. But like, obviously it's good to be proactive, so don't like twist those words. But always trade what the chart's telling you. Like, don't just enter something blindly because of just a technical indicator or just a hunch or just because it's oversold. Like, I need multiple indicators to flip to do that. So that's a good point there, and doing what the chart's telling.
Yeah, no, absolutely. And if we compare Amy to SPY, let me just pull that up really quick. In regards to how we're currently doing, in regards to the general market here. So, you can see that despite market conditions, because you have to keep in mind, like, yes, Amy is falling, but blue chip stocks are falling. You know,
a lot. Did you see that tweet I had the other day about Netflix?
Yep.
November 26th, they're like $311 billion market cap. And like they just recently closed at, what was it? Under 100, I think. I think it was 75 or something.
Yep.
Something ridiculous, yeah.
It's brutal. And so you can clearly see that we are holding up strong. Of course, you know, we are falling currently.
Which is gonna happen. Like you can't just like
which is going to happen. You can't exactly always beat general market conditions, you know. It's just how well do you hold up against it, you know.
Mm-hmm. And look at the fluidity compared to the
even the strongest stocks right now are surviving. And we're not falling.
Yeah. Not at all. Oh,
and then
is this our boy?
Me earlier.
It's our corn man.
Is the
actually
corn
like this?
But so these are corn futures right here, overlaid with Amy. Just pay attention to the peaks.
And honestly, what I would do, Darren, is you see the left peak, like the highest point on the left side. Keep that there, and then just maybe push AMC up to where like the 72 is the top of that left peak. Because what happens is like corn futures precede movement of AMC, so keep pushing it up to the top of that left peak, like the top of the 72 should be. There you go. Because then you'll see where the true divergence hit.
Yeah.
And it's like that's what intrigues me the most, because in June I want to say we were like 3 to 7 sessions delayed from corn, roughly. You could even argue more than that, but like maybe it's even a month, because you see like where corn starts making its big move, arguably like right there roughly.
Yeah,
AMC didn't make theirs.
It'll be about a month.
Yeah, but if you notice, like as it keeps going over, this 34 run was a little bit more close to where like obviously we didn't get the extent of the run that corn did, because like markets started dipping on January 29th or 28th maybe. So like if you stay on SPY and look at like right before the Russia stuff, it was January 28th. So like you could flip over to where the corn overlays AMC, and you'll notice that like when SPY really starts selling off, like corn was going up, obviously because of inflation and like just commodities in general are going to do that. As AMC just got yanked, like basically to start the year. And that's basically when the Russia stuff started, the fear started. Like this was the worst start to the year since 08, historically.
Yeah.
Which is nuts. I think it's even worse than 08. But that's where the divergence happens. And that's what intrigues me, because obviously inflation hit, and it just like threw obviously lumber, like the supply chain issues, everything else, it threw everything like through the roof. Like obviously we're seeing that trickle down to gas now, but before it was more commodities, energy, and it still is, but it's just crazy to see that. Like that's too much of a, it's too intriguing for me to deny, like as cheesy as it sounds. But
yeah, no, I mean absolutely.
But basically as corn futures start to drop significantly, that's been a strong indicator for us historically that AMC is moving within, it was a month. That previous run I think was about 1 to 2 weeks was what it was doing. So like it just keeps getting tighter. So the fact that this is one of 50 different things, but the fact that we're dropping right now on corn futures, like with everything else involved, just really intrigues me.
I know, seeing the correlation between all of this stuff is extremely intriguing.
Yeah, and I'll go like back to.
We have someone pointing this out in the dip.
Mm-hmm.
Let's see here. Just overlay. So, right here. Two. A bit more. I can this is fine. This is the USD C80, US dollar, Canadian dollar.
Oh yeah, let me get this out, please. Yeah.
And I just think that the inverse correlation here is so strong that it gives you some perspective as to where SPY could go.
Yeah.
I know a lot of people are incredibly bearish right now, crash started, whatever, and I understand that. Me personally, I think that this looks incredibly overextended.
Yeah. Oh yeah.
I'm personally expecting, and I could be wrong, could absolutely be wrong, and I'm under the impression that SPY is indeed going to fill, let me get rid of this, is indeed going to fill this gap right here, right between 406.
Yeah. Easy.
408-ish. If I go into the micro more, you can see that's actually up at like 411-ish. And then we still have this gap up here between 424, 426, 427.
And is that's on the daily, right?
This is the 1 hour chart. Typically, I look at it with more micro.
After hours off.
Yeah.
Okay. Gotcha.
And then we appear to be in some type of what would I even call this? Call this some type of descending broadening wedge. But I do trade Elliott waves, something I always look at to back up my conviction trades. And tomorrow with CPI data, I mean, CPI is going to be a big deal tomorrow. And I mean, we were talking about this all day. Have to beat 8.5, have to be below it. Otherwise, we're going to see things take a pretty strong downturn. Me personally, I think it's going to be bullish. All that it needs to do is be below 8.5. And if that does happen, I don't think we're going to have any problem.
I agree.
Problem at all getting this type of uptick. And then after that, I mean, who knows? We are absolutely due for a crash of the overall market.
For sure.
And we have seen a very strong drop already. I mean, it doesn't get a whole lot worse than this.
And that's kind of where like I'm at too. Is we've been progressing this since September and like October, and if you wonder why, like I don't know, where's September? Here's July. Here's the end of August. Like when we were supposed to run, according to BAM, because like if you line up AMC, like it had its little micro pump and had like its last kind of breakdown. So I think that was right here. Here's August, well, end of August. And once we got rejected at 52 and broken down in, it was just too tough, man. Like with the markets dipping, as I just mentioned, which of course it's not going to pop up there. With the markets dipping, it's like we were losing conviction in the play, especially on the second one in November when they decided to roll their FTDs again because of major expiration in December. So like this looks like it should have been a spring down and then came back up, but it just didn't have any steam to catch. And like once they rolled those FTDs, it's like okay, like it was a tough time of life at the end of last fall for sure. For anyone in this, I mean, most people know I've been in since it was January 12th of 2021. I think I caught it at it was right over $2. It was like $2.50. That's why I entered, and like I just had a few weeklies because I saw what GameStop was doing, and I was like, oh, AMC looks even more torqued. Let me play them, and then woke up 75 grand richer, and basically evolved everything. So I'm not a meme trader, but like, just like, dude, you just don't see stuff like this always. And I do plenty of swings, but like, it just was stupid for me not to continue to pursue. And then I basically exercised a lot of contracts up here, had around 10,000 shares, sold off some more, prepped for another run in this range, and then hit it big again in June. And I thought it was just going to keep going. And like, I sold out and like locked out maybe 50-ish% roughly, probably 40%. So like I had like crazy gains. Like, don't get me wrong, but like I also bag held a lot and thought like, oh, it's going to need to go down. Like I'm not going to sell the next day or the next week when it went all the way to 40, and then rode it back up again to 65. Sold a little bit of more there, but like I felt it. I felt a lot of that, like with the rest of the people. So I just want to get perspective there, for sure. And then what were you kind of hitting on as well, like market psychology or just conviction in the play?
Regarding market psychology here, we'll pull up Amy again. These corn futures is so I've looked a lot into the overall algorithms, and we should make a video just specifically on algorithms at some point, because that's
a whole conversation. Yeah,
a lot to unpack. And typically I like looking at the logarithmic chart, but you notice I don't have that pulled up here. This is specifically meant to basically break you mentally.
Yeah.
You know, you said, every single, we were all looking for that standard retracement off this move. We're like, oh man, this, everyone's screaming Mo ass to the moon, so on. And don't get me wrong, this was a damn nice move.
Yeah.
But was it quote unquote Mo ass? Was it the short squeeze? Well, no, and we have data to back that up. So after we didn't recover back up to that $60 range, that's when I really started to look into the whole idea of cycles, so on and so forth.
Yeah.
And I guess my question to you would be, where did you? I don't think I've talked to you too much about cycles. When did you start to get under the impression that, in hindsight, that we were
like
running in these kind of cyclical patterns?
A couple of different things, but like a lot of it was just also like just understanding the market dynamics, and like being a stockbroker, a lot of times we had to call up to the street and like, I'm not gonna name like specific names obviously, but like call out to market makers that are basically routing orders and controlling flow to these exchanges. And like if you needed to bust a trade and it was something the house error did, like if we filled you, there's a lot of different scenarios to it to like go bust a trade, but then you could also call in to like push a trade through. So like I understood how these market makers operated and like what kind of leeway they would give on risk versus reward. So many different things in that nature to where like it drew me while I was still working there, like to dig into it more and just like, what do these guys actually do? Like how much control do they really have? And it's like, dude, they're the funnel to the market essentially. Like they have extreme power, but like so many people have allowed that just to like basically put them on their knees, like the retail, which obviously like you're fighting against something that's been controlling the market since the beginning of it basically. So you got to understand what system we're also breaking at the same time as it's being exposed, because like I had mentioned it down. This is when I started getting vocal on Twitter. I made the account, got shadow banned for back in the Constitution, like no threats or anything, but it was apparently inciting violence. When I was talking about there's something about freedom of speech and basically regaining the Constitution that is rightfully owned to us when all that Ken Griffin stuff went down or whatever. But I mentioned that, and it was when I was starting to expose stuff, and they Twitter banned me for 12 hours. I get shadow banned all the time, and have had multiple threats against me. So like, there's a reason I do it the way that I do, and like, I don't know. I don't think I need to justify anything, but basically, like, I'm just trying to show you guys what I know to be true, and I'm never gonna be shooting out some hopium or stuff that, like, essentially, like, there's so many layers to this to where, like, what I say is all based on experience and knowledge of it, like, direct hand. So, like, these market makers just do not lose. And I don't want to.
I mean, basically a big thing that I think AMC investors need to realize if they are in this for the long haul, the quote-unquote short squeeze, is you simply need to change your perspective.
Yes, dude, thank you.
It is all about perspective.
Yeah.
You see us dropping, a lot of people just see us, dropping from 72 down to, what do we close at today? 1184.
Yeah.
Well, you see that, and I see this.
Yes. Let me pull this up for you.
Let's see, where's my volume range? For some reason it took away my face.
I can edit all this.
I see accumulation now.
Uh-huh.
You know, this is where they are accumulating shares, just like they did down here. Before this absolute monster happened.
Yeah, and I mean, it's when we got added to the Russell. So, like, when you get added to the Russell, the prime lenders can go out and buy 80 million shares and then lend it out 3 to 4x over. Like, obviously, again, separate conversation, but, like, hindsight is 20/20. If I would have understood the full dynamic then, I would have, like, played it a lot more smart. But at the same time, like, that gives it enough reasoning and justification, along with the manipulation, to, like, understand this. So, keep going.
Yeah, no, absolutely. You know, when you have algorithmic trading accounting for, you know, anywhere between 75 to 90% of daily volume, you know, it is not speculation, it is not a conspiracy theory that most of this is purely algorithmic. You know,
100%.
I'm sure everyone has seen the stats by now. You know, the data every single day. You know, around 60% plus of all of our daily buy volume goes direct exchange, and that's huge. You know, that is huge. And if you look at dark pool activity across the market, AMC, GameStop, their dark pool activity is substantially higher than most other tickers, and there's a reason for that.
Yep.
You know, people need to realize and get the perspective that they are sitting on a ticking time bomb.
Yep.
You know, and that's not hopium. That's an absolute fact. There is a lot of power here. You know, they were trying to short AMC into bankruptcy down here. Yep. You know, what changed the algorithm, you ask? Well, retail stepped in, began owning the float.
You know what I just
Algorithm
noticed
switched.
here, Darren, before you keep going? Stay back there. So you see the schematic from, like, that dip, that right where your cursor just was, on the right side, above the 0.382, to, like, the W, the left handle of the W on the right side. Like
This
the
one,
most
right?
recent one before we ran to 34. So the left W,
Yeah.
this left arc. Look at this whole entire W, just like a macro, like just kind of a W, or like a big W with a small M on the inside. And then look at the smaller schematic from about post-January run, before the June run. You notice how, like, that little W in there is a very similar one?
Yeah.
And then the big one is from 2020, when we got shorted off a cliff. And then it's, like, just basically something very similar to that, but just with the different waves in between. So this is what you mean when you talk cycles, correct?
Yeah, that's exactly what I mean. That's exactly what I mean.
So,
Yep, nothing new under the sun here.
yeah.
You know? This has happened. Granted, you know, you can say that, you know, January through June was more bullish looking, and I suppose I do agree, you know. Only thing is that we had the buy button removal here. You know,
Yeah. Oh, yeah.
things went down a tad bit differently, but just purely algorithmically speaking, just like what Nick just pointed out, you know, this right here, this entire thing is extremely similar to this.
It's just stretching and tightening the algo, dude. And that's what I've been trying to explain to people.
Yep. And when they do that stretching, what does it do? You know, it causes panic among shareholders.
It tries to exhaust them.
Yeah. No, there's shakeouts. It's shakeout after shakeout. You get bored. You know, like, maybe this isn't going anywhere. You know, I saw this thing on Reddit. I'm getting conned. Blah blah blah. You've seen them play that perspective 1.5 million times.
It's crazy,
You know,
man.
So now you have the mainstream media coming out. You know, we're just talking about the general market, how it relates to these quote-unquote meme stocks.
Yeah.
You know, you have mainstream media coming out. I'm sure everyone's seen the clip by now. You know, 401ks are getting burned up, and it's just because these retail investors don't know when to exit stocks, namely GameStop and AMC.
Yeah, it's sickening, dude. And, like, the fact that, like, they wait to start releasing hawkish style news, broad market or economy wise, until really, like, arguably post Russia, post 34 run, as the market fell off since 422 or something.
Yep.
Like, broad market started dipping down, and then they're like, oh, like, AMC's done, XYZ, get ready for a recession, all this stuff with rate hikes, and like I just see right through it at this point. But it's hard and kind of tiring to try to show that or explain that to people in text. So that's a 30K overview of Darren and I, and kind of encompasses our viewpoints and why this doesn't concern me. And why, I think where we're at now is honestly the bullish we've ever been with how stretched the tape is and what we do now. So, it's going to tie a bow on it and wrap it into expectations with CPI tomorrow, and a little bit more of a micro now that we got our fibs and macro. And I can kind of jump on that, but you notice Darren's key fibs, 1813, 3081, and then what is that top one? 70, 72 something?
7262.
Yep. So obviously that's a macro fib dating all the way back to 2012. I'm not sure what you put that off. Yeah, so with the golden pocket, people argue oh, we're going to
2021 year. January 5th, 2021 that one.
Okay. Oh yeah. And people are talking about the $8 and the $10 and everything like that, and it's just my biggest thing is they got to understand the full market schematic and dynamic before you can make that assumption. Just because a fib says that there's a golden pocket down there doesn't justify the market or AMC or anything else to go down there. You could adjust your fulcrum point and draw your fib off of I don't know, pre-June run, and it'd be completely different. Given, again, there's different approaches to that, but my main indicator is OBV. So kind of just going forward, and what I'm seeing here is what's really interesting me, and we'll shoot some micro and kind of get this wrapped up, because I know we're pushing a longer video. But so I have my stream up right now. You can kind of see something similar on your side, Darren, but I've always been a key and strict believer in the chains. Options chains aren't going to lie, neither is OBV. So especially in a scenario like this, it's just so black and white for me, to where we mentioned stretching the tape. If you look at OBV here on our January run, you can hardly see it down here, but it's very unexpected. So OBV is going to look a little bit different, but majority of your buying was, I don't have VPR on right now, was about I think it was $9. Yeah, it was $9 up to 12 or 13, somewhere right around there. That's where your strongest volume profile is, meaning your the most shares being held right now, or most volume in that range. So we accumulated a good amount from January until June before that. So I look at this OBV here, and it's very spiky. You could draw a support line on it, showing that it hasn't, it never dropped between that time frame, even though they threw the price all over the place. Respected these support lines, tested some new resistance at 1326. That was a key one for it. And then if you notice just the overall shape of the OBV, it's very jagged and stretched out. But you notice it dipped down here, had these little micro dips in between, shot up, dipped down, kind of the same pattern. This pattern from 319 until 5/6 of last year is what interests me, is that OBV pattern. And let me just even zoom in closer here. So this guy and this guy are the equivalent. So from 319, OBV got tripped off. It had that fake out run, and then it got tripped off, and oh, this thing's dead. Let's push some more BS to the media that they'll never be profitable. So that's this same dip here from, I would argue, January of this year down to Jan 27th, early February, when I started talking hey, we're approaching a big fulcrum. We double bottomed. They're gonna try and drag out this tape. A big move is coming. And then we had the little shot up, and that little shot up is intermixed in here as well. Then we had our second dip. There was a true fulcrum at 1290, and that's the equivalent to me of the 893 was kind of that dip. Or actually, sorry, this one right here. Yeah, 893, 845-ish range. So that's the equivalent, and then you get this another micro run. So that's right here, and it does come back down for that final kind of dip here on OBV. Then we shoot up. So this peak here from 314 to 328. I was shocked that the zone of strength I had hit so perfectly, but from this point here, this stretched out one is the equivalent of this mini spike up here in 427. And then it's just this pullback from 427 down to 5.6 is basically what I see as someone just very stretched out. Like I mentioned, like they trapped all the premiums, they got their money. The Netflix crap, they had those giant shorts. That's what kind of gave them this extra little gas here. And then they're just doing the same thing. It's on a cycle. And what I see here is it's approaching this fulcrum. So like tomorrow might not be a blasting green day, but like this little box that we got it kind of cornered in from a technical standpoint. Like these diamonds are like extremely intriguing to me, because that's when it kind of ping pongs in its little box and it can break out of it at any time. So like with CPI data tomorrow, not only is it going to break out of this diamond, but this is also that downtrend on that micro or macro wedge, the green line. Like we've tested it a lot of times and almost got out of it, but this break here is going to be violent to where I think it will be a 15 to like 30% day, kind of like trading with emotions is saying. So just know that I see it. I mentioned with ER 1 to 3 sessions before it shows. I see it potentially being sometime this week or early next week. It's just whenever that broad market gets its consistent push up, we're going, in my opinion. So that's kind of about as short as I can keep it, essentially, when it comes time to that and the macro and what I'm really looking at. Because if you look at the 4-hour OBV on the 180 days, like, it really didn't dip off. We held support at 42 on OBV, meaning no one's like really selling except maybe when we broke that key support at 1350 range. But even then, like, this thing's so torqued and completely oversold.
Yeah, no, we're sitting at a major pivot point, like you pointed out.
Yeah, man. But yeah, I just wanted to tie the whole thing into a bow real quick and just wrap it up, because I know that we're getting to be a long video here and I want to keep it concise for everyone else, because we'll have plenty of market dynamic videos going forward. So I'll get into my trading strategy and stuff like that. That's just kind of a broad market overview, 30K foot, and we can kind of expand and increase our focus on certain topics there going forward. So appreciate you hopping on, Darren, and thanks for joining, guys.
Thanks for having me.